that now.
I did it again, guys. I did it again.
That's why the live.
Justin and I were just sitting here talking for 30 minutes, going through our rental analysis, and, you know, being clever and witty and doing all those entertaining things that everyone watches this show for. And I forgot to hit the go live button.
You know, I wasn't really going to drink much, but
when I have a thing scheduled, when it has a scheduled time, you should pop up like a thing that's like, hey, go live now. But it didn't. And, well, that was unfortunate. So
I'm just going to have to ask you every podcast now.
Yeah, I mean, honestly, you probably should. You probably should. I should put like a sticky note on my monitor that's like, did you click go live? Oh, boy. So the thing, what did you miss? What did you miss? The markets are crazy, driven by bond yields mostly. Rocket Mortgage, I'm invested in that because it's a great product and customers love it. And that went up 60% the other day. It took a dive 20% today. And we bought some real estate. And that's kind of where we're at now is we bought some real estate. We closed on our first real estate investment back in November. And we're kind of like looking back, going through the numbers that we ran previously, comparing that to what we're seeing today. And you're caught up 30 minutes in 2 minutes. So lucky you.
A lot of it was just some bullshitting that I thought was hilarious because we're fucking funny. But
I mean, we are really funny people. So I mean, I'm sorry you missed it. I forgot to click the button.
Now you just get to hear a bunch of assholes actually talk about whatever we're going to talk about.
Exactly. But I mean, we've had a little bit more to drink now, so it's probably going to be more interesting.
For better or worse. Definitely.
So let's go through the numbers again.
Wow. For the first time we're seeing these.
For the first time ever, I'm sharing this thing. So this is the spreadsheet Justin and I use when we're basically preliminarily, that's a word, preliminarily.
That sounds made up.
Looking, is it made up? Is that real? I don't know. Who cares?
By the way, this is not a regular spreadsheet. This is called a Trey sheet because Trey built some stuff behind the scenes that actually pulls information automatically in from Zillow because when we analyze a property, this makes it a lot easier.
Yeah, I actually have these scripts. I'm pretty proud of these. So it started out with this little script where I could type this command and pass a Zillow URL to create this spreadsheet. But then I'm like, well, that's too much work when I'm analyzing a bunch of properties. So now I have this other command that I can paste in a Redfin saved search URL, and it creates one of these for every single property in that saved search. It's super cool.
And it makes it a lot easier for us to analyze. And before we bought our first property, how many of these sheets do you think we went through? Like 24?
I mean, a lot. I mean, hold on. Let me just pull this up real quick and I'll show you because I have all the properties.
That's right. Here. They're neatly organized.
Yeah, this script puts it all into, so like we've run analyses on all of these.
It's quite a few.
Yeah, there's a couple there. So we've done a lot of these and it was getting really tedious there for a bit, duplicating this spreadsheet and punching in all these numbers and all of that. So that script definitely helps a lot. And it makes it like our ultimate goal is to be able to run a lot of these pieces without having to be super, super involved day to day, right? Like our thing is software, marketing, and repeatable processes. So like that's what we're bringing in to most businesses that we're going to be working on. And this is us sort of building that up, like software tooling around this so that we can get a repeatable process. We even have like a ranking system for properties from like 1 to 10, like 10 being like a 4-to-1 wedge deal, cash flowing greater than 0 a month, and all of these other things. So yeah, that's kind of where this comes from. So we run one of these on every property we look at. Once we look at the pictures and we're like, that could be an interesting property, we run one of these and we base it off of some basic criteria, like the estimated cash flow, not that one, this one. The estimated cash flow on the wedge size is pretty much what we base it off of. So for those that don't know, a wedge deal is basically something that we can buy under market value, fix it up a bit, and then immediately increase the equity in the property. The 2 properties we bought, not wedge deals. They're just not.
Yeah.
They were
they're nice homes already.
Well maintained, newer homes in a great neighborhood. So we bought them at market value. So this 265, that's what it was listed at. That's what we bought it at. And so we go through here, we fill this out. Closing costs were incredibly high when we were closing because like we had to pay a lot of points just to get this rate, which was important for cash flow reasons. Rehab, I think we stuck around 5,000, maybe it was 7,000. The rehab included here was like carpet cleaning, regular cleaning, and paint. We painted the entire interior, walls, trim, ceilings. It was a mess. There were a bunch of different colors, and the carpets need like really cleaned. So that I think we stuck pretty close to it. So we put in somewhere between 72 and 77,000 on this property. And we had an estimated value after rehab of 270,000. This was based on comps and Zillow. It was very, very close to the purchase price because, like I said, it's not really a big rehab. So there's not much of a wedge here, if any. Like I don't even know if you can call 1-to-1 a wedge. That's just like a flat stick.
It's not a wedge deal. Not your typical wedge deal.
Yeah, it's just like a flat stick. It's not going to be able to wedge anything. It's a shim. It's a shim. It's a shim deal.
Shim deal.
A shim deal. We should coin that one. The Financial Illiterates shim deals. We'll
not
teach
a bad
you how to
deal.
invest in fair market value real estate.
Yeah, we probably shouldn't.
Oh boy. Hey, speaking of, we should throw wedge deal up on the personalfinancedictionary.com.
We should.
We really should. We should put that up there as a definition. We should get on that.
Then I'll have to remove one definition then if we do that.
Why?
There's 69 right now.
Oh, that's right. Never mind. Don't add it. It's the only dictionary in the world that's never going to change because we can't change how many definitions there are. So, okay, and back
monetized. To it. Yay!
How monetization? I don't even know what that would be like. So we're getting $1,900 a month in rent. We were targeting $1,999, $1,950, but we ended up getting a tenant that would sign an 18-month lease for $1,900 a month. And since this lease started January 1st, it puts us right in summertime. So we thought that was worth it. So June of 2022, we're up for renewal, and we'll be reevaluating the rent at that point in time. Our current goal is basically increase rent 2% a year. So it's very small, regular increases over time, rather than infrequent, large increases. Basically keeping up with quote unquote inflation. No one really knows what that is anymore, do they? They really don't.
They definitely do not.
People talk about inflation and they're like, they just act like it's the silliest thing in the world. It's really funny. Yep. That's a whole nother topic. So, I mean, we got this number from the internet, 5% vacancy. Enough said. So we're pulling in $1,800 a month roughly in gross income. And then we dive into the beautiful things called expenses. And they kind of are beautiful in real estate because everything's written off. Like there's so many write-offs in real estate. Like you don't make money in real estate. You lose money, but you still get rich. It's like magic. It really is. Like if you really think about it, it's magic. Real estate taxes, insurance, we pull those straight off of Zillow at first, and then we revise these as we get quotes. So like the insurance was updated after we got a quote. Real estate taxes, we're still using the Zillow numbers, which are pretty close. The only tricky bit in Florida is you have to make sure that you're using the tax numbers for someone without the homestead tax exemption. Because the homestead tax exemption is like a massive write-off for Florida residents. It really is a great tax structure, honestly. Like it makes it so taxes are very, very low on property if you live in Florida. And then they charge the taxes to people like us who do not live in Florida. So they're making their tax revenue from non-citizens, which is pretty cool.
If one of us lived in Florida but had a rental property, would we then have?
No, it's got to be your primary residence.
I see. Okay.
Yeah, so
Yeah, say
it's a
I'm
pretty
about to
cool
pack
tax
up and
structure,
move.
honestly. Yeah, no, I mean that's a whole nother topic, right? Property management. This one's funky. So we have one business that does property management for our other business that holds the real estate. So we actually are obligated to pay ourselves property management. So this is an expense on the property, but we also kind of get to keep it. And then 5% of this, well, not 5% of this, but 5% total of the rent goes to my dad, who does the on-site property management for us. So I do most of the remote property management. He does the on-site stuff. So like when the dishwasher's broken, like it was the other day, because we got to buy a new dishwasher, he goes out there and takes a look. So there's that.
He is our go-to guy.
Speaking of new dishwashers, repairs and maintenance. Repairs and maintenance. We're estimating 10% a month. Who the F knows? You know, like a lot of months we're going to pay nothing. Some months we'll pay $300 for a dishwasher. I was supposed to look up one of those dishwashers today. So I don't know what this is going to come out to. I think end of 2021 would be interesting to sit down and run the numbers, see what we're actually looking at, and we can work that into our new models. We don't pay utilities. None of this stuff is in there. It's good to keep in there, but our HOA covers yard maintenance. They cover exterior paint. They even cover regular roof replacements every 5 to 10 years, something like that. So this roof was actually just replaced like 4 months ago. So that's pretty dope.
Wow.
You pay for it, but it actually ends up netting out less than if you were to pay for paint. Actually, it nets out less than if you were to just pay for yard maintenance, because yard maintenance is ridiculously expensive. So, you know, we're paying like $983 a month in expenses plus the $923 for mortgage. So we are making negative $100 a month. That's how we do it, right? This is how all the real estate courses have taught me to do it, I think. Right?
Yeah. What do you mean negative cash flow? Now, it's not
Negative
really.
cash flow.
Now, we do bank some of that money, right? Because repairs and maintenance, if you look at the
Right. We're not spending this every month. We actually bank $133 a month. So right there puts us cash flow positive $33. But
yeah,
you know, our investment thesis is not based on cash flow here. It's something we're looking into in a couple of other areas right now. But our basis on this is appreciation. And that brings
this is
you
an
to this
appreciation
glorious spreadsheet here. So our assumptions: increasing rent by 2% a year. Expenses also increase by 2% a year. It appreciates by 3.3% a year, which is high for some markets. It's actually average for our market, which is one of the reasons we're invested there. And it costs 7.5% on average to sell the property. So we can basically look at what our internal rate of return is at every single year. And then you can also look at the equity accumulated every single year. So normally what we do is we come out here to year 10 and we're looking at a 9.5% internal rate of return. So that's a 9.5 annualized return over the life of the property at year 10 with, you know, a $14,000 to $17,000 increase in equity every single year.
Yep.
Plus the cash flow, which actually comes out positive starting year 6. Again, based on, you know, the negative with the property management and all that stuff.
Yeah, and the repairs and maintenance.
Exactly. So that's basically what we're looking at. So now what I think is interesting to look at. So we bought this thing for $265, right? Bought this thing for $265 back in November. It is now valued at $288,000 according to Zillow. So I'm doing some quick math here. A $23,000 increase on the initial purchase price. So we've already appreciated by 8.6%.
That's really, what does it show that we should be at this year on the sheet?
10,000 under that. We're at year 2 numbers right now.
Beautiful.
So that's great. You know, I mean, it's a Zestimate, right? So rough.
Yeah.
But let's go use the numbers that we use. Yeah, let's use this number. This is what we normally use to figure out the fair market, the after rehab value.
Oh, is that the
What?
comps?
What?
Yeah, that's kind of wild.
This
Huh?
market's high. I didn't look at this before we popped on this thing. 300. That's like, there's no way we could sell this house for 313,000 right now. That's nuts.
Nor would we jump.
But
right
it
into
does
that,
justify that the 288 is actually somewhat reasonable. I mean, the market is crazy right now. Like these houses, they're going in like 2 days from the time it gets listed on the MLS. I mean, the house next door to this one that we got, we only got it because we talked to them pre-going on market. So like we had an offer in within minutes of listing on the MLS, and they already had another offer.
Right.
So it's going crazy, but 288,000 on 265,000 was some number that I forget. 23,000. If you take that and you divide it by 77,000, our levered return on this so far is 29.8%, which is nuts. So for anyone that's curious, a levered return, that's like that 8.6% return was on the total value of the house, but we obviously didn't put $265,000 out of our pockets. We're borrowing money. It's leveraged.
That's where the good debt, the mortgage.
Right. We ended up putting about $77,000 down. So our return on that $77,000 is now a 29.8% return, which is like half as good as Rocket did yesterday.
But it's a good alternative to the stock market in that case.
I mean, it is. Well, it's the thing is, it's consistent, right? That $10,000. No, it's like roughly $15,000 in equity accumulated every year, right? That's equivalent to a 19% return every year on our cash in. So, like, we're regularly and conservatively getting a 20 to 30% return on our cash annually, which is amazing. That's why we like this
fantastic
stuff. Yeah, it's great. And like it's a decent amount of work to get up and going initially, but it's great. I mean, look at that graph. Like, who doesn't want to invest in a stock that does this? And look at that. We bought right here. Look at that. Down and it's just like boop. Everyone's buying.
Yeah. That's what's crazy about that area.
Yeah,
why do we think that this area in particular is so hot?
All the areas are hot right now. Is the thing.
All the areas in
I just read the email from Redfin the other day about the state of the market, and apparently supply's crazy low right now, and people are just buying like crazy. So we kind of bought this house right at the beginning of when a lot of real estate investors are trying to buy. So like there's not a whole lot of supply because no one's really wanting to sell their house at that time. But real estate investors are like us, where they're just like, let's grab some properties. So there's a lot of demand, very little supply, and there's still very little supply and still plenty of demand on top of the fact that mortgage rates are like at the lowest they've been in a very long time. So like all of those things combined are just making the market go crazy. And then on top of that, Florida didn't have near as many lockdowns and things like that. Well, that's an exaggeration to imply that they had any lockdown because they didn't. They really didn't. The governor, we won't get into that. We won't get into that. But because of that, like their real estate market kind of stayed more open. You know, the realtors didn't have an issue of like having to do virtual tours and all this other stuff. They could still be going out to properties and things. So I think all of those things combined, and then on top of it, like the reason we looked at this market was not COVID related in any way. It's the area that I grew up in, and it has just been growing like absolutely crazy for as long as I'd lived there, which is, you know, we moved there like 12 years ago, something like that. It's just blowing up. So, and it's going to continue to do so. So we're in an appreciation focused market, not a cash flow market.
Right.
I feel
we're
like
looking
all
to
I've
other
done is
areas
just
for cash
spew
flow.
out words for the last 20 minutes, 50 minutes for those that were here in the private unviewable live stream.
That was just you and me, man. We had our own. So yeah, There's an analysis of our
That's how we
very
do it.
first real estate investment.
Yeah, and overall, I think it's gone pretty well. Like it could have gone horribly. We could have been trying to sell it right now because it went so horribly. But I think we put a pretty good tenant screening process in place. We set some very very basic but good limits on things like credit score and eviction history and income requirements. And we took our time. We were okay with the vacancy to get a good tenant in. So we got some
Mhm.
good tenants in both properties. We did end up like lowering some standards on the second property, but making very intentional decisions on that. And I think we got great tenants in both properties, and we spent a lot of time putting these numbers together and tried to not be optimistic at all. And I think because of that, it's working out really well so far. So
Yeah.
over time, the cash flow will just naturally increase because 30-year fixed rate mortgage, that's not going up. So yeah, I think it's going pretty well. I'm excited. I'm excited to actually talk to our mortgage broker today to figure out how we can buy more houses without money.
Are you talking like commercial loans?
Yeah, the answer is basically there's not a whole lot of way.
Cool,
So there used to be
cool,
there
cool,
used
cool,
to be
cool, cool,
like
cool.
investor credit lines and things like that available, but COVID shut all those down. So she's trying to figure out if those are still available. There are like debt service based loans. So apparently, if you can show a rent roll on the property that covers
Oh,
the debt, you can get a loan without any of your income qualifying you, which is interesting. Um, so there's things like that that are options. I did
hmm.
find out that the mortgage companies are okay if for context, I have a storage account where I put money aside to build up for these investments. Previously, I used Ally back in the days of 2.2% interest. Like, oh,
Oh, sounds
you
so
remember
good.
that? Oh my God, such high interest. But now there's BlockFi, right? And I'm planning on using BlockFi in USDC as my storage account. But with crypto being the way crypto is, I wanted to make sure that they were okay with that. And I got confirmation that as long as I take that money out of crypto into a bank account before underwriting, it is okay to use that money to qualify, which is
Oh,
great. That means I can use that as
interesting.
my qualifying account, and I still get to earn my 8.6% interest without having to do like crazy weird like timing of transfers and all that stuff.
Right.
So yeah, we're trying to figure out how to
That's
buy the next property.
invaluable.
I think it's just going to be a matter of building up enough cash to get it. And we're
Right.
starting to look into some other properties outside of single family homes, like maybe a hotel or something.
Vacation rentals, hotel type
Vacation
stuff.
rentals, hotels. Yeah, we're really thinking a bit more on the cash flow side now too, right?
Yeah,
Yeah,
that would be
we
really
got some of
interesting.
this appreciation going, which is awesome, but the appreciation, I mean, it won't pay the day to day bills either. So
Right. That's more of a long-term play, which is
exactly,
okay. Which
yeah,
is
it's
okay.
great. Yeah, but it would be nice to be able to free up some time to focus more on this stuff by having cash flow pay for it. So that's kind of where our
Right.
head's at right now in terms of the real estate thing. So I don't
Yeah.
think anyone's watching, but if anyone is watching and they have questions, pop a comment in there.
Or if
Uh,
you're watching this 10 years from now,
yeah,
hopefully we are
the
still
comment
doing something.
I might not see the comment in 10 years.
I hope we do.
Oh, dude. All right. Massive shift of subjects here. So I was
Okay.
watching Millennial Money. Do you watch that yet?
No, I
Okay.
haven't been
Dude,
consuming
you
a lot of
need to
content.
watch it. You need to watch Millennial Money. It's so funny. It's this
Uh,
podcast, except with two more people that have a lot more money than us. It's very entertaining. And like there's massively frugal people in there, and then there's lot less frugal people in there. And Neat Kevin, he's got 20,000 to 30,000 shares of Tesla. He revealed today.
wow.
Yeah, it's a lot. Um, but I was watching that earlier, and they were talking about car insurance at one point. And Jeremy from Financial Education, Jeremy, um, I can never pronounce his last name, so it's just Jeremy from Financial Education. Jeremy. He he was like, "See, this is why you just have people handle that for you. I don't even know what kind of car insurance I have." And Andre's like, "Dude, I just wrote that down on things rich people say." And I had the most genius idea. Thingsrichpeoplesay.com.
That would be a good. Is the Instagram handle taken?
Dude,
That
the
would be a good
website already
Instagram too.
exists. I bought it
Oh,
and
it
built
does?
it today.
Wait, no.
Yeah.
Oh my God.
Go to things. I'll share my screen. Hold on.
Hold on. Let me.
Please hold. Please drag up here and then this. Yeah. And then share my screen. Okay, here we go. We're doing it live.
Oh my God.
We're doing it live. Which window is it?
I don't even know.
This window, right here. Yeah, it's only got that one quote on it so far, but things rich people say. Boom.
Hey, and I see a lot of room for some Google ads right there.
I can add that's on the plan. I can add whatever quotes we want in there. I've been going back and forth on whether people can submit their own or something, but I don't know. I bought this today and I looked it up and I'm like, there's no way this exists, or no way this isn't taken, and it wasn't taken. And I'm like, well, it would be irresponsible of me to be an engineer with this idea and not buy it. So I bought it. I commented on their video, said that I bought it. Thanks, Andre, and then built it.
It'd be great if
this is what my morning was.
It'd be great if it curated things across multiple channels, right? So it's like you're scraping Twitter. This is from YouTube. Like it's just pulling in a number of different, like maybe some news articles or something like that. That'd be great.
So if anyone has things rich people say, and you know who said it, send it my way. Twitter at Trobrock, and I'll get that thing on here. It shows like the 10 most recent ones on there, and maybe we'll change it to show random ones or something. I don't know. Right now, it just shows that one from Jeremy, but I enjoyed that a lot. That was my morning.
Can you show the personal finance dictionary so we can see our beautiful ads on there now?
Oh, yeah.
So we reached a milestone on last Friday.
Look at that. There's an ad.
The Google gods have blessed us with monetization.
Blessed us.
Which means
there's like
they
ads on
they
ads.
Believe
but hopefully they're not too
our
intrusive of
content
ads.
Is worthy.
If you guys do like end up reading stuff on this site, like tell us if the ads are too intrusive. I've tried to put them in places that are not too crazy.
No, they look good, especially on mobile. They actually look really good on mobile.
Yeah. So yeah, we're that's dope.
Yeah, we're monetized.
Yeah, top one I haven't figured out how to get smaller. I want to make
it's actually the one on the right. It like cuts off the text kind of formats around it, I guess.
Yep.
Yeah. But yeah.
Yeah, so that happened too. So that was cool. We got monetized there way easier than on YouTube, man.
I'm now comes the SEO legwork and getting some organic traffic there, but it is quite a big milestone.
So Josh has a question. What should I invest in that is under $10?
Well, can't you do fractional shares so you can really invest in anything with $10?
Yeah. I'm going to give an answer that will probably be hated. But I'd buy a book. Like
which book?
How much, I don't know. I got to see how much they cost.
Oh yeah, Josh, these are recommendations from a place called the Financial Illiterates too, so please do your own research before.
All right. So you can get Rich Dad Poor Dad for Rich Dad Poor Dad for $8.99. So that is
a great personal finance book.
That's a great book.
I would recommend that one.
Yeah, I mean, if you haven't read that yet, I would start there. That is an amazing book. 4-Hour Work Week.
That is. It's right here.
You can find 4-Hour Work Week for under 10. That's also a great book. Yeah, what are the books that I got over there that's worth reading? I mean, those are literally the top two on my bookshelf. Those are like
Oh
the
wait,
two that started everything for me.
we got a couple other. This one.
I have not read that book yet. It's on my list.
If you read Rich Dad Poor Dad, you probably don't have to read this. This is just Rich Dad Poor Dad told in parables.
Yeah, and
Basically
that's
a
why I'm
story.
interested in reading it, just because like I like to consume the same sort of thing in multiple different ways. That's why I like Gary Vee's content, because he just keeps saying the same thing over and over and over again in different ways.
I just picked this guy up too.
Interesting. I started rereading the Wealth Management Index, which is over $10. But if you're an uber finance nerd, which I mean, you're probably not, it's a very good book. It teaches everything about running a wealth management practice, but also if you jump to about halfway through, it teaches you basically everything you need to know about wealth management, which is cool because everyone focuses on asset allocation and where to invest, but no one really talks about asset protection and prevention and cash flow management. And that's where I learned all about utilizing credit lines and portfolio lines of credit and things like that to smooth out irregular cash flow.
That is very helpful. This one is by David Swenson, the dude who runs Yale's endowment fund.
Now, if I only had $10 and it wasn't going to be on self-improvement, what would it be? I would probably right now long-term investment would be in crypto, probably Ethereum. Short term, I would try and find an NFT to flip.
How much do you have to know about NFTs to know which one to buy, though, right now?
Right now, I think you need to know nothing. The market is so insane right now. Like, I think you can pretty much. It's ridiculous. It's really ridiculous. Like, there was a photographer that just sold some prints the other day. He sold 2 different prints on Nifty Gateway, and he listed them for $499 each. He sold 1,000 of them. He made $500,000 in one day selling digital photos that he sells on other websites as prints. And I guarantee he makes nowhere near that in the lifetime of his account.
Why did people choose that one?
Why did people choose what one?
Like, why did they choose to buy his prints?
His prints were really good. He's a good photographer. So what I'm about to say, I don't want to downplay his ability as a photographer and artist. People are buying NFTs right now because they are NFTs. There's so much hype around NFTs right now that like everyone just wants to own them. And like I don't own any, to be completely clear. I don't own any, and I have no intention of buying any in the very near future, because I still am trying to understand what the valuation of them is and what the long-term play of them is. I have a lot more opinions on them, like the things that I think are going to long-term last and the things that aren't. I'm more interested myself in building products and services around NFTs and capitalizing on it that way. But right now people are buying NFTs because they are NFTs. It's freaking crazy. But I think with $10, you could find an NFT, and it's sort of like the online arbitrage that Gary Vee used to always talk about, where you buy it on Facebook Marketplace, and you flip it on eBay, and like this sort of stuff. Like, I think this sort of thing exists. I think you can find something for $10 on OpenSea, get it onto like Nifty Gateway or Rarible or something like that, and resell it there. That's like a little bit more of like a premium sort of marketplace. And I haven't done this, and I haven't proven it. This is just like me spitballing right here, so not financial advice, but I think that's very, very possible right now with how hot NFTs are.
That is.
So
what
where
I
would you
did,
put it if it couldn't be on self-improvement?
Well, what I did last year was it was $20, but I went to Marshall's. I bought some coffee mugs, the ones that are like the metal container ones.
Mm-hmm.
I bought 4 of them. for very cheap, sold them on eBay, and I kept 2 of them and still profited. So
Nice.
just like little things like that. It's like, it's the arbitrage, right? It's like garage sailing. Go to a garage sale, buy stuff for cheap, sell it on Facebook Marketplace or
It is.
eBay. And
Arbitrage is it's a fascinating thing. That sort of stuff, like I mean, at one point in my life, probably I would have been into doing that, but it's like the profit isn't there for me. Like I'd have to do too many for it to make sense. NFTs are a little more interesting. I've been thinking about looking into some of the arbitrage there, but I think like I can generate more value by building something around NFTs rather than actually doing NFTs myself.
Yeah.
That's
NFTs
basically
are
all I've
interesting
been
right
doing
now.
the last like 2 weeks is like brainstorming ideas for products around NFTs. It's pretty much
You
like
should,
literally all of
well,
my spare brain cycles.
yeah, you've started to craft your own investment thesis around NFTs. Like where is it going long term and where should the bets be placed?
So I've been focused on when we say NFTs, I've been focused on crypto art. Right. So there's a bunch of different types of NFTs. There's crypto punks and all these other things that like honestly they're just like they're too digital age and like game culture for me to even understand in the first place. So I've been focused on crypto art because that's a place where I think I can understand a bit more. So my thesis is mostly based in there. I think that in the long term, handmade traditional art is not going to do well as NFTs. I think it will exist as NFTs, but I don't think it will do well because by digitizing that handmade art, you're actually reducing the scarcity of it because you're now duplicating it, whereas previously it was not duplicated. It wasn't duplicatable. Like you couldn't make the exact same thing again, right?
Right.
So I think by turning that into a digital copy of it and turning it into an NFT could reduce the scarcity. Now, some people are selling NFTs along with the physical. That's a little more interesting, but really still the value is on the physical side, not the NFT side. Where I think NFTs are very interesting are on naturally digital assets, things like photos or like 3D art or AR art, videos. I think are very interesting. Like there was even this brainstorm idea of like a NFT OnlyFans type thing. Brainstorm's got to go everywhere, right?
Oh, that's
But
crazy. You
I
heard about that.
I think I think I think that space is going to benefit from it because if you think about photography, that's where most of my headspace has been because I'm very interested in photography and all of that. I think photography is going to benefit a lot from it because if you think about a photo, it's naturally digital, very, very easy to reproduce in very high definition, if not original quality. NFTs can provide more scarcity to it rather than take the scarcity away from it.
Mm-hmm.
So I think they will exist longer term for that, in my opinion. I have no idea though. This feels like one of the biggest things that's been created since the internet. That's my personal feeling about it. Crypto was big. NFTs are massively bigger.
So where are you placing bets? What companies are doing the things that you like? Or is it just going to be, have they not even been created yet?
There are a lot of NFT marketplaces. Almost every single NFT marketplace I've seen is just that, an NFT marketplace for all NFTs. Everyone is welcome. They're trying to capture the whole marketplace. It's eBay. It's eBay. I think where the opportunity is, and this is where I'm focused, is on the it's a good like product. Maybe like Etsy is it's like a better parallel, but still not even as niche as I'm thinking. Like a marketplace where the user experience is designed for that type of thing.
Yeah.
Like a photographer's NFT marketplace. or a VR artist NFT marketplace, or a whatever else, like these micro communities and marketplaces, I think is where a lot of the potential is, and that's where I'm focused right now. Again, I'm focused on like building value around NFTs rather than investing in them. At some point, I'm sure I will invest in them. Right now, most of the values seem a little high, and I'm not an art collector. Like, I don't really know even how to pick on traditional art, which has more like research and backing around who's good and who's not. And now, like,
Yep.
digital art, like everyone is producing these NFTs. Like, I don't know if you can really even effectively pick. Like, you can pick stuff that you like, and I think that's a good strategy. But if you're coming at it from an investing angle, I think it's a very difficult place to get. Like, I think you would do better following Wall Street's bet in the stock market. I think you have a higher chance of hitting a home run by doing that than you do trying to hit a home run in NFTs right now if you don't know art very well.
Right. And the whole NFT market is so new. Everything's so new.
It's very new. And it's also just like exploding. There was an NFT that sold the other day for $6.6 million.
God, that's unreal.
It's insane. That photographer selling 2 photos for $500,000 in a day. That is insane. I mean, congrats to the dude, but wow. Like, I kind of want to take like this photo over here and see if I can get it on Nifty Gateway and see what happens.
Yeah. Do you have a link to this guy? I'm curious what.
Yes, I do.
Kind of what he has set up.
Let me find it here. Been talking with one of our mutual friends a lot about crypto, and I posted it there. There it is.
Did you say in our Discord?
It is in Discord, yes. It is in Discord.
We love StreamYard.
Well, here, I'm going to drop it in the comments if anyone wants to check it out. So it's there. But you can go and, well, here, I can actually show it on the screen. Look at that. Dope. So, yeah, he's a very talented photographer and made $500,000 in a day. Didn't have to deal with print houses or anything like that.
Wow.
And what's really cool is if he got the right contract set up, you know, so these are digital contracts. If you got the right contract set up, then every sale from there on out of his photos, he is going to make a percentage of.
Wow, that's cool. So
I don't remember.
Royalties are built in.
I think Nifty Gateway does that. Some platforms have a contract set up to do that, and some don't. But if he does, he's going to get 5 to 10% of every sale of those 1,000 photos forever, which is huge.
Right.
So, yeah, it's crazy. But good question. I like the $10 investing question. It's very restrictive and challenging.
We had to go a little meta on that.
Where would you invest? You never answered.
No,
you did. The coffee mug thing. Never mind.
I wouldn't say that's like my one. I do love the book idea. If I was investing for the long term, like I did put some money into Bitcoin a little bit ago, so that could be it. But if you're like asking where to put $10 of stock, like you can buy fractional shares. So
yeah,
depends what kind of return you're looking for, but you can buy basically anything.
Yeah. What kind of return and what kind of risk? Like if that $10 is literally all you got, maybe you don't want to risk it in crypto. Maybe you want to just put it on Apple. Apple's great. Apple goes up. Yeah. Apple pays dividends.
Do some research.
Mm-hmm.
I'm not sure
as always, do your own
Financial
research
Illiterates.
because
yes.
even if we were financial advice givers, which we are not, we're just a couple of idiots here sitting in a basement in an office that like to invest our own money. Everyone's got their own thing that like jives with them in terms of investing, and you got to find
Invest in what you know.
in what you know and what gets you excited. Right. Like there are certain types of investing that just aren't very exciting to me. Like, the stock market is honestly not very exciting to me. Investing in the stock market, I have a hard time with, just because like to do it effectively, you need to like go and look at the businesses like numbers and metrics, and it's I don't know, it's not very exciting. Angel investing is very exciting to me. I've now
Yeah, I was
made
going to
5.
mention. Have you did one last week, right?
I think I did 2 last week.
In a company that I believe in too, that
Yes,
I use.
that's actually why I invested in it. So I think the thing that I like about angel investing, now I don't know the returns that I'm going to get from these, right? So like they could all go to zero and this is completely moot. But the thing I like about it is, one, I started a startup, so I think I know something about it. But what I'm investing in is the team, which I feel like I can evaluate fairly effectively, and the product, which I feel like I can evaluate pretty effectively. Whereas in the stock market, you're evaluating it based on like their SEC filings and their GAAP accounting, which I don't know. One, it's entirely public and everyone has access to the same information. So like it's kind of a hard market to beat people in. Whereas the other is a little more isolated and a little more subjective. And I think there's opportunity for bigger returns there. But yeah, I've now invested in content platform. I'm not going to list the names because I don't know if that's like a thing I can do.
Yeah, I don't know
Yes.
if you're supposed to
So
do that or not.
a content platform, a wine investing platform, which is very interesting.
I love it.
I think one of the big reasons I invested in that one was actually around this NFT hype and the like Pokemon card hype and the sports card hype. I think wine investing's about to have its time. Like not many people realize that this is a thing that's happening, and there's platforms making it easy to do.
Is Gary Vee on this one?
Yeah,
Has
I
he
haven't
been
heard him talk
talking
about it, but I'm sure he kind of naturally invests in wine. No,
it?
Gary's interesting because he doesn't really invest. Like he kind of does, but not really. He collects. Like his sports cards, some people would view that as investing, but he actually likes having them. Like he views NFTs as like I'm collecting them rather than I'm investing in them, which is a very small and distinct difference. But I think it's an interesting difference. Another one was a live streaming like fitness platform. So like think Twitch for fitness classes.
Mm.
I forget what the other two are. One was fintech related. I know that. Yeah, I don't remember what they were, but I've made $1,000 each so far. My goal is to make 10 of those in total before the end of the year. And then hopefully at least one of those comes back for more money and I can double down on it. Or
I hope the
more.
rules for angel investing change soon, because as of right now, you have to be an accredited investor just to throw money in.
So here's the thing, and I just had this thought as I was walking through that whole conversation. One of my arguments for why I like angel investing is because there's less competition. And like the accredited investor thing, I don't think makes logical sense. Because like someone like you doesn't qualify to be an accredited investor, whereas I do, and it's simply because my job pays more money. It's not because I'm more intelligent or I'm a better investor. It's just simply because my job pays more, which is that's a ridiculous thought. That's like saying you can't drive a car because you live in California, but I can because I live in Connecticut. It makes no sense. I mean,
Right.
I guess if you've been to California, it does maybe make some sense, but it doesn't make any sense, right? So, like, on one hand, I'm like, they don't make sense. They should get rid of them. But on the other hand, there
The
is a lot
competition,
less competition because of this.
the barriers to entry.
The barriers to entry, I think, are a benefit here. So,
See, it sucks because I've worked in startups for going on 7 years now. And I'm like, I feel like I would have some fun or better success investing in or having access to invest in these startups versus,
you just got to make
some of the other stuff
$200,000 a
out
year.
there. Great. I'll do it.
Or
I will do it
over
eventually.
$1 million in assets.
Is it an or an and?
An or.
Okay.
There are three qualifying criteria. Accredited investor.
That's funny.
There are three ways. There are 3 ways you can qualify as an accredited investor.
Our next article is ready. Speaking of it.
Oh, nice. An individual with gross income exceeding $200,000 in each of the 2 most recent years, or joint income with a spouse or partner exceeding $300,000. So, see, you could get your partner to make a lot of money.
Oh, after
and a reasonable expectation of the same income level in the current year. Okay, reasonable expectation. Who's going to be like, I want to invest. You know what, though? It's not reasonable that I'm going to make the same amount of money this year. There's no way for you to prove that, but... Or
that's so ridiculous.
The other way to qualify is a person whose individual net worth or joint net worth with that person's spouse or partner exceeds $1 million, excluding the person's primary residence. So net worth of $1 million or annual income of $200,000.
Okay, I can make that work.
Yeah, you get there. You just got to make some big YOLO bets.
Yeah. I'm more of a slow and steady, although I would love a couple yellow bets.
Do some.
I would love to do some angel investing is what I would love.
I haven't figured out what happens if you do it and you're not accredited.
Yeah, would that fall under fraud?
I have no idea. You should ask your accountant that. Maybe they would know.
Yes, that's a great idea.
I don't know. I don't know what happens there.
Let's roll the dice and find out.
Maybe ask someone first. Maybe ask. Okay, there's a lot of things I will take risk on. Legal is not something I like to take risks in.
Yeah, and that's why we have...
The ROI is generally not there.
That's fair. I'll accept that.
Yeah, So, what else we got to talk about? Anything? Whoa, why did my StreamYard end up all the way over there? Okay, there we go. I'm back.
I think that's it.
I think it was a rough start. It was a rough start, and but I think it was good. And thank you, Josh, for joining us tonight. And I hope you enjoyed this, and I hope we could effectively answer your question. And I hope to see you next week, as with everyone else. Join us next week, Wednesday at 8:30-ish Eastern, or 8:50 if I forget to hit the go live button, one of the two. And
that will not happen again. We are
next
that
week,
is part of our checklist now.
Next week we have a guest. I cannot say who the guest is. I cannot say who the guest is, but I can say what the topic is. We are talking with this person next week about their decision to take half of the income that they were making and throw it away for the sake of their sanity and happiness. So that's next week. We'll see you guys. And peace out. Where's the button to end the thing? It's over here somewhere, maybe. I don't have the outro, do I? So I just click the end broadcast. Bye.